Bloomberg Audio Studios. Podcasts, radio, news.
At CERAWeek right now with Ryan Lance, CEO of ConocoPhillips. Hey, Alix.
All right, thanks so much. Really appreciate it, guys. That's right, Ryan Lance, CEO and chairman of ConocoPhillips, which is the largest independent oil and gas producer right here in the U.S. It has shale, it has offshore drilling, and it has LNG. It's got all the stuff. Ryan, it's always good to see you.
Thank you, Alex. Great to be here.
It's a tough tape right now if you're a commodity producer, right? I mean, oil was at a 6-month low yesterday. What's your outlook for the price?
Well, we were always probably a little bit bearish in the short term, but we thought that would probably be the second half of the year as inventory builds started to come into the system. Obviously, with the OPEC Plus announcement, that's gotten probably accelerated into the first half of the year. But I think long term, we're still very constructive. We see demand growing at over 1 million barrels a day for about as far as the eye can go see. So we'll work off the spare capacity that people think is sitting in the OPEC Plus. There's still room for more U.S. growth in production as well. So pretty constructive over the next 5, 10, 15 years. But we're going to go through some short-term volatility.
Yeah, and the short-term churn is obviously also around recession fears and demand fears with those tariff headlines. Are you seeing any indication of slowing economic growth?
Yeah, we're starting to see some early signs of inflationary forces sitting in the system today, kind of post-COVID coming out. You accelerate to today. So I think there's a bit of inflationary forces that are impacting kind of the savings that people have, and they're wondering about the spend that they're going to have as a consumer today. But still, the U.S. economy is still pretty strong underlying that. So I would still bet on what we're doing here in the U.S. Rather than some of the other places that go around the globe that have other structural problems to fix.
For sure, we're not the only one with problems. That's definitely for sure. But here in the U.S., you still think it's a good place to do business, but will be a more expensive place to do business if we have tariffs on aluminum and steel at 50%, say, from Canada, reciprocal tariffs come April.
Well, yeah, I think it's got some inflationary forces, but we got to let the system equilibrate a little bit. And I think we have to give the administration a bit of an opportunity to work through this. I think some of the border issues, certainly the fentanyl issues and stuff like that, take them for what they're saying, that these are important issues for the United States. So I think there is probably some short-term influence on the prices at all, but I think we need to let the system equilibrate a little bit and see how it's going to work longer term.
So you're telling me, Alex, give it some time, and I'm going to say no, Ryan. Yeah. How much does this increase your well costs on a short-term basis?
Well, I think we're driving efficiencies, and then we can get into the generative AI and some of the offsets that we have that we've been able to do over the last couple of years, and that's not stopping either. So from the inflation on the capital side, we've had some efficiencies in the business that we've been driving 10 to 15% improvements every year, and that's not stopping as well.
Okay, well, that's something. So you can offset it, I think is what I'm hearing. Okay. Drill, baby, drill is a sexy catchphrase of the Trump administration, right? What would you need to see to be incentivized to drill more on the policy side or the price side or whatever? Yeah,
Alex, I don't get. It's a great bumper sticker, as you say, but I think it's a manifestation of an overall energy dominance theme sort of for the U.S., recognizing that we're blessed with a lot of resource. We have a lot of infrastructure here. We're the poster child for kind of building in the U.S. and our industry over the last 30, 40 years, building refineries, taking crude import from Canada, from Mexico, from other places, upgrading that, and then exporting the product. So our industrial complex in the energy space has done exactly what this president is talking about in some of these other verticals. So I think it's important to step back from it and say the energy industry has actually done what they're talking about wanting to do in some of these other pieces of the business that's going on. The energy business has been the poster for this.
Fair enough. As I mentioned before, the oil price has been struggling. What also stood out to me is just last week, Conoco hit a 52-week low. Yeah. Analysts do talk about the fact that your stock is not valued the way it should be. I mean, that's actually a conversation in the analyst community. Why aren't shareholders giving you love?
It's been a tough tape, certainly for the last year or so, and we've been struggling with that a little bit, and it's disappointing to watch, but I think it's a confluence of events. Certainly the downdraft in the commodity prices hit all of us. We probably surprised a few people with the Marathon transaction that we announced last year, and it's probably a little bit of a show me story because the synergies are there. We'll see that. We'll put the runs on the board every quarter. We'll show how we're making the company more efficient and how we built more scale inside the company. That's really, really important in this next chapter that's coming in the unconventional space. So I think it's a confluence of events, but maybe the last couple of days we've had a little bit of downdraft or updraft in our share price that maybe portends things to come.
Is it also sort of where you're, like, how much are you spending? What's your CapEx? Shareholders want dividends and they want buybacks. You're giving them dividends and buybacks, but you're also spending. Where are you spending and what's your commitment there?
Yeah, so a bulk of our spend certainly sits here in the US of A, so we're big into the unconventional, spending $5 to $6 billion a year right there. We're leaning into Alaska. We have a very large project up there called the Willow Project. We're leaning into LNG investments, both in offshore in Qatar, but also right here in our home at Port Arthur in the Gulf Coast. So we are leaning in. We'll be spending about $12.9 billion of capital this year. So we are investing for the future growth and development, and we're leaning into some longer cycle projects. And at the same time, the shareholders getting their share back. So they're getting over nearly 44% of our cash flow back via the dividend channel and buying some of our shares back today. So I think we're very competitive on free cash flow yield, despite spending $3 billion this year on longer cycle projects that are for the future growth and development of the company, which I think are important. Shareholders should like it because it's really going to the sustainability of our business model, what we're doing, and maintains our leading position in this business.
And a big part of that will be LNG exports, and I'm curious as to your outlook on gas. If we get a peace deal in Ukraine, do we see Russian gas come online even more than it already is into Europe, and what does that mean for U.S. LNG exports?
I think it's probably naive to believe that Russian gas is going to stay out of the market for a very long time, and certainly if they're able to come to some agreement with Ukraine, we would expect some gas to start flowing back to the European markets. Will they ever go to 60, 70, 80% reliant on that one source? I would hope not. That would not portend well to, I think, the future of Europe as well. But we do think gas probably flows back in over time into Europe, but we're pretty constructive on the LNG market. Today it's a 400 million ton market. We think it's growing over the next decade to over 600 million ton, which is why we're leaning into the LNG space, both in Qatar and both here at home, taking some of the natural gas that we're producing in the U.S., liquefying it and moving it to markets both in Europe and in Asia.
Even if there is an import tax on U.S. LNG into China?
You know, I think there's other markets that we're still pretty thoughtful about, but also pretty excited about. We think this business is going to grow, and U.S. is going to set the floor for gas prices globally because we have so much gas. You know, in that $3.50 to $4 million B2 range, we're just blessed with a lot of resources. It's going to be that source of volume into Europe and Asia.
Before I let you go, you mentioned a marathon, buying Marathon last year and all the synergies. You looking at other stuff, or are you going to cool it for a while?
Well, we got our plate pretty full with the capital investments that we're making. We're making a lot of progress on the transaction. It's closed. The synergies are there. Like I said, we'll just show that continued improvement quarter in, quarter out. And a lot of said did. This is what we said we're going to do. We're going to go do it.
Okay, fair enough. Hey, Ryan, it's really good to see you. Thank you so much. Really enjoyed talking to you, Ryan Lance.